Hi everyone, and welcome to this week's IMAX FinTech Weekly Market Insight. As usual, we're going to start with part one, which is looking back at last week. Before we continue, just to go through our disclaimer. So trading does involve the potential risk of loss of capital and is not suitable for everyone, and yes, hopefully it is for you. Many companies offer leverage. Just be aware that you can lose substantially more than that initial investment. And of course, the views, everything contained in this is just purely for educational purposes. We're just trying to help you prepare for the week ahead. But what we are not doing is trying to encourage you to trade or invest. That must be your decision. Before you make that decision, carefully consider the risks involved, your financial situation, definitely your level of experience, and also your risk appetite. And only risk capital you're prepared, but more importantly, you can afford to lose. Any doubts, just seek independent financial advice before you risk your capital. Okay, so let's have a look back at last week. So the debt ceiling default sort of finally averted, with both Congress and the Senate passing the bill, which only left Biden to sign it. And of course, that's just with X Day arriving. Well, potentially it was supposed to be tomorrow, but maybe they'd have still managed to find some cash from somewhere. So apart from that, it was all eyes on the employment data. Jolt surprise to the upside, back over 10 million jobs available. And then staying with the jobs data, ADP also beat, coming in at 278,000, followed by NFP delivering yet another job surge at 339,000. I always like to look at the wages and hours worked though. So if you look at them, there was a little bit of an offset there. They wasn't quite as strong. So wages were only up 0.3% month on month, which is 4.3% year on year. And unemployment increased also to 3.7%. The thing with some of this data, though, you just got to look at which calculations are used, because that can have a big impact. Another big impact, which was part of that big number, was that quite a bit of it came from sort of the private education and health sectors. Other winners were leisure and hospitality. Of course, services continue to improve. And again, as usual, it's the manufacturing that's really suffering. But IT was lower as well. ISM manufacturing came in at 46.9. Now, new orders were very disappointing, I would say, 42.6. I mean, that's really contraction territory. And prices paid 44.2, which was lower than expected. This all seems as though it's just going to continue, but it's going to have investors in two minds for the next FOMC, which is in a couple of weeks' time. And even the Fed speakers have been really mixed on the expectations of where the rate peak's going to be. So I'll cover that a little bit more later. So in the EU, Fitch have warned Europe they will struggle to cut any debt in 2023, which makes sense really, doesn't it? Consumer confidence came in lower at down 17.4, well, minus 17.4, and economic sentiment at 96.5, excuse me. Industrial confidence dropped down 5.2, and services sentiment lower at 7. Retail sales down 4.3%, PMI manufacturing 44.8. And then staying with the EU, CPI came in, core was only 0.2% month on month, which gave 5.3% year on year. Now the headline was flat at 0%, but the overall year on year is still 6.1%. Moving on to Germany, CPI was minus 0.2% month on month, but still high, 6.3% year on year. It's lower than expected, but you know, it's still pretty high. China stocks rallied towards the end of the week, that is. PMI manufacturing lower, 48.8, and non-manufacturing was up though at 54.5. And Caxin PMI up to 50.9. Moving on to Japan, unemployment rate 2.6%, very low. Although industrial production was lower at minus 0.4%, and retail sales also dropped. In Canada, GDP was 3.1%. That's the annual. It was 0.8% quarter on quarter. So again, not too bad. In Australia, CPI was higher at 6.8%. So, you know, suddenly that's bounced back up again. And just a little bit of company news. Amazon is in talks with mobile phone firms to offer Prime members some form of sort of cheap services through mobiles, obviously. Okay, so let's have a look at our services. Okay, you know, as I keep mentioning, you know, we do all this to try and help you guys. You know, I've been in the markets 50 years, so this is my way of passing some of that on. And as a company, Cymax, you know, we're here for helping people. So we offer a free daily newsletter, which includes global news, you know, headlines, global news, my views, it's all there. And then also we do offer, as a fresh service, daily chart levels, pivot points. So, you know, they're fresh every day, so that does sort of help you, just sort of saves you some time, really, I would say. It lets you focus much more on your trading. Okay, so then we offer one-day workshops, so, you know, to help people that are looking to get into trading. Maybe they want it as a whole career or just as a second income, but we also offer these a variety of one-day courses just to help people to fill in any gaps that they may have. Then there's 1 week courses. You know, by the end of that you'll feel competent and confident, but it's just going to give you those real basic foundations to build your trading career on. And of course, you know, if you've got an inner trader in a week, I can find it. Now we do offer another 1 week course, which includes a free trading challenge. So that may interest you, especially if you feel that you're underfunded. You know, these funded accounts are anywhere from 25k all the way up to $1 million. And if you're really serious about turning trading into a career, then our comprehensive accredited masterclass, which is designed to provide you with all the knowledge and trading tools you're going to need to navigate not just these markets, but any markets in any conditions, and also any asset class, which is really important. You know, have you found the right asset class for you yet? Okay, on top of that, we offer trader mentoring just to help people get to the next level. We consult companies on FX and commodity exposure, and of course we provide trader education content to individuals, exchanges and brokers. And if you are looking to gain a funded trading account, then one of our partners offers a great set of criteria for that. And actually our new course, which includes a free challenge, starts tomorrow, the 5th of June. So feel free to contact us for more details or any questions you may have, info@cymaxfintech.com, or just directly to me, chris.tubbing@cymax-int. www.nfp.com. Hope to see you in part 2, where we're looking forward to what's out this coming week.